Hello, 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 and a massive hello to everybody. How we all doing? Rocking and rolling in a free world. Here we go, here we go, here we go. So, 12th of April 2017. No trade calls, no recommendations. Everybody sponsors their own stuff. We're here for educational purposes only. So, who's up? Who's ready to go? So again, trying to keep up this this trend of doing these on Wednesday morning. Welcome to everybody. Just trying to pay it forward. If anybody has anything they want to look at, any chart they want to discuss, hit me up on the chat. I'll try and cover it. If not, I'll give you a brief outlook of where we are and what we're looking at, trying to update on some of the things we discussed in the Sunday videos, right? So first things first, as we've been saying, a lot of people saying new normal, VIX is never going to go up again, blah, 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 blah. Whenever you hear people saying it's different this time, usually want to fade them. The problem is you don't know how long it's going to take to get paid. But still, here the focus is, slowly we're starting to see this VIX move higher, right? Very constructive. As we said, we would expect to see at least a move back into the high teens, but most likely we'd be expecting a scary move sooner or later to come into play. What a lot of people are going to be struggling with is the fact that VIX is up, but equities aren't down. It is what it is. Sooner or later, things tend to get back in whack. I mean, the focus is clearly on the fact that these equities are looking a little bit tired, right? So if you look across the board, even let's start here since we're going into EU Open. If you look at the DAX, I think we discussed this pretty much live in one of the morning calls. What we discussed was this failures at highs here on DAX, and we thought the risk reward was particularly interesting to the short side, right? Anywhere inside these highs you could trade with about 1% risk, and there's a lot of room to go to the downside, right? So what does that mean is whether you're looking for some kind of scalps here off these highs, or whether you're looking for a move back into the 50, into the 100, all these bigger levels, 3%, 6%, 11%, this clearly seems to be an interesting play, and it's trying to get some traction. I mean, is it moving as quickly as you'd want it to move? Absolutely not. It's trying to hovering here, but it's trying to it's trying to get some traction. Another chart which we've been talking about for an awfully long time and is starting to get a little bit more traction here is basically Nikkei, right? So here it's it's not looking too healthy. It's the same thing across the board for these equities here, and you see it's trading just hovering above 18,500, and it's as long as it holds, it can hold a bid. But you see here it's holding heavier, heavier, heavier. You might see this whole level here where the market still tries to chop around, but if it lets go, it could clearly accelerate, and that's what we're focused on. Now, if you were short the market yesterday, I'm afraid I jinxed it for you, because we were trading at the lows yesterday, and I mentioned to somebody in one of the room, how depressing would it be if we closed back unchanged? And it pretty much ripped back higher. So it is what it is. It seems that the market still has this underlying mid tone, but we'll just have to wait and see. I know I wouldn't want to be positioned long into the long weekend with Syria, North Korea, Russia, all kinds of, Germany, all these news on the wires. I clearly would not want to go into the weekend, hey, look, long equities and short gold, but, and that's the way we've been going into all the weekend risk is short equities, long gold, long bonds. And so it's just going to take some time, but right now it's stubbornly hugging this 50 DMA, right? And I think as long as it keeps on holding, the buy the dippers are still holding on with a finger and are going to be very vocal and very proud of the fact that they're holding this. But the day it moves, it's probably going to be much, the longer it hovers here holding on just with a finger, the more ugly the puke is going to be once it comes. It doesn't have to come, right? That's the key. It doesn't have to come. But so unfortunately, there's not an awful lot to update on the equities, because it looks like this 50 DMA is really working a lot of magic, right? If you go on the NQ, I don't know why this is still holding above the 50 too. Nice little short opportunity, but still holding above the 50. And if you look at the YM, you know, hovering, still holding this 50. I mean, the YM also, we've got an open short here from the webinars, which is quite a nice little action. You know, we had this 3 standard deviation channel. We said when we pressed higher, there was very nice opportunity to look for a bigger structural short, even if you're going with about 2.5% risk for at least the 5% reward. And that's trying to play out. So again, we have to be patient. As we discussed on the bonds, again, pretty much first target done here. The healthy move here, you'd expect some kind of correction, and then this being decision time for either the next leg or the puke. But the way we've got, you know, with all this geopolitical risk, is that they're just holding bid, and it's no surprise they're holding bid, right? And the same thing as if you look on the GC, right? We were looking for this to move back and try and tag these 1300s, right? Nice little trade off these lows, about 2% risk with about 8% reward back into those highs. You know, full disclosure, we flattened out on this trade here. You know, you just have to be smart about it, right? You can't, you know, the last pips can be the most expensive. So, you know, with all this stalling, we flattened out here, but this is still in play, and it's all about this descending trend line. So again, I wish there was an awful lot. Again, if anybody wants to look at something in particular, but, you know, yen, we talked about this yen saying there's an awful lot of nothing to do as long as we hold inside this range in terms of structural level, right? And we're still stuck here, so it's just looking for direction. It's stuck all around here. We have to wait and see what happens. There have been a lot of intraday trading opportunities, right? Nice little short opportunities on here, but in terms of the bigger picture, not an awful lot has changed here, right? So we just have to be a little bit patient, right? What do I think? Yan, did you watch the beginning of the webinar? We discussed DAX. So if you missed it, you can watch the recording. But we discussed, or I don't know if you're talking long or short, but basically we're still looking for DAX to basically, just a quick one. On the DAX here, we're in bigger swing shorts on DAX for a move back down, right? Here it looks like it's hovering, but again, we've got a lot of geopolitical risk. So short term, this will be a bull bear line, right? Close below here, we'd expect it to come back into the 50. Close above, we'd expect it to try and move there, but this is all choppy action at highs, right? So again, in terms of currencies, if you're looking at the DXY, right, what is going on? So we discussed this, and again, no surprise, very nice action, very technical. We talked about the fact that it's all about this action here, and that the only thing you could really do on this negative close here is to get short for a move back into the 100, right? We're not particularly smart. We're just looking at what the price is telling us, right? Your price moves back up into here, fails of the moving averages, daily reversal here. You know, you can get long, but, you know, if you look at back on the charts, usually these kind of patterns, there's a bigger chance you get paid to the short side rather to the upside after this triggers, especially if you're trying to look for asymmetric risk reward opportunities. So right here, that's the play, right? And whether this is a function of risk on, risk off, function of geopolitical risk, function of Kuroda having indigestion, whether it's about Yellen deciding to wear a pink coat or not, it doesn't really matter. The only thing that matters is price and how it reacts at specific levels and what opportunities you can find around there, right? So this is still in play, and of course this is going to have a reaction, right? And this is just going to translate across all the other USD currency pairs, right? Essentially, euro being the biggest weight here. So that's what's in play here. So a lot of people asking, you know, what are you doing today? Is again, I have no problem talking about any of my trades, and just ask along. And what we discussed, I tried to be as because we don't offer any trade calls or recommendations, but I tried to be fairly clear about this on Twitter this morning. I said, hey, what I'm looking at here, the most interesting thing into the open is Euro GBP, right? So what's going on Euro GBP? Here, particularly interesting because we've had an aggressive move down. We talked about the fact that we would want to respect this ascending trend line, right? And we've got a lot of moving average confluence here, right? So let's look at this a little bit more tactically. And again, this ends up, these videos always end up longer than I want them to. But anyway, let's look at this tactically on a 1 hour coming into today, right? So how would we look at this? We're coming into the day and we say, well, look at this. So we've been extremely heavy, right? Very strong support here. Markets tried to cap this, but we're puking back lower, right? All these moving averages, overhead resistance, right? So as we're coming into London Open, what's happening here? Well, we've got a low that's clearly being defended in overnight session in Asia, right? And we're going into an awful lot of event risk, right? We've got BOE, Carney speaking, average earnings, et cetera, et cetera, et cetera. So small double top bottom on the shorter time frames. What does this do as far as we're concerned? If we're looking for a little bit of profit taking, does it make sense that market puked all day yesterday? Number one, give me a heads up or not. Market puked all day. So we close at the lows, we come into Asia and we can't break those lows. So we're not particularly smart, but we'd suspect that since we can't break lower and we're going into some London Open, we're going into some data, etc., shorts might want to take a little bit of profit. What does that do? That gives us an opportunity to try and get long with a tight stop, fairly tight risk, to play for a little correction. It doesn't have to be a huge correction. It can still be a counter trend trade in what ends up being a bearish move. But what this does is the risk, the reward on some profit taking, even into this multi-confluence zone of moving averages, offers us what we called asymmetric risk reward opportunity, right? Risk this to try and make this. So that's what we're looking on. This looks quite nice here, already taken some off here. And again, let's see if we get a little bit of traction on the pop. You'd have to respect these levels, right? Previous supports now acting as resistance. So if the bears want to press this, they'll likely come in here. If these levels go, then do not be surprised to see yesterday's highs try and get clipped in the positioning squaring into the data release. Okay? So guys, let's see what happens. I hope you find these useful. Again, I'll really try and keep my commitment to do these every Wednesday morning. Have an awesome one. Hit me up on Twitter. Need to get back to trading. A lot of stuff to do today. Busy day. Have an awesome one. Thank you so much for sharing. Thank you so much for liking. Always good seeing all the usual suspects in the room, guys. Have an awesome one. Take care. All the best.